Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully all of you had a very nice weekend so far. And keep in mind that all of these options plays are going to be for selling options, more specifically for selling put options as part of the wheel strategy that we like to run on the channel. Now, selling options is a very easy strategy, whether you're a beginner, intermediate, or even an advanced investor. Provides some great passive income without taking on too much risk. And that is why it's been the backbone of my strategy that I've been running on the channel publicly for the last 2 years. Now, in today's video, guys, a few things to cover together. Number one, we'll be going over the expectation for the week. We know that Friday threw a little bit of a stick in the wheels in terms of the most recent bull rally. So we'll take a look at exactly how we're standing in terms of the technical analysis on the SPY and the QQQ and what we could possibly be expecting for this week. Number two, we're going to be going over some of the strategy rules that I like to look for when I'm looking to write put options under the market. And then lastly, number three, of course, is going to be the top 5 options plays. There's actually more than 5. I'll throw about 8 to 10 at you guys today for the top 5. It's going to be like top 8, top 10 plays. And also a ton of bonus plays as well at the end of the video. So all in all, guys, I'll probably be throwing out like 25 different trade ideas. So there's definitely going to be something for everybody. So that being keeping that in mind, guys, let's jump right into the action, shall we? So in terms of the expectation for the week, well, we know that in terms of the technical analysis on the SPY, guys, the context was always a daily downtrend. If you've watched a lot of my daily market recap videos, we know that we were in the context of a daily downtrend after the large Jerome Powell pullback. And now, although the bulls have a very nice bounce, they bounced about 78% on the SPY, they are trying to go for the daily trend change, but we have not completed it yet. We have established the lower high, but nothing is telling us whether we have a certainty of a daily uptrend follow through or whether or not the bears will be too powerful this week and we may just roll over this entire bounce altogether. Keeping in mind, guys, we don't really have any macro events this week at all. No major macro news until the Friday session where we get the ISM manufacturing PMI, but before that, the week is very light. We also do not have any major earnings either. So for a large part of the week, guys, it's going to be purely price action based. We know it's another holiday week. Wednesday session will be off. So in this week of trading, guys, I will be once again cautiously optimistic in terms of my positioning. If we rally early on in the week, I will not be chasing names that are up. I will be looking for names that have been kept down. And a lot of the top 5 options plays that I'll give you are names that are in very decent support levels. So I'm not trying to guess whether or not the SPY bulls can get the daily uptrend follow through. Same thing for the QQQ bulls. I'm not trying to guess whether or not we're going to break to the upside, even though we do have a bullish leaning bias because the weekly uptrends are in uptrends as a matter of fact. And the SPY weekly is also in an uptrend, but we're not in the game of guessing here. We will react to the price action levels. If we start coming down early on the week, it's going to provide some very juicy opportunities to be writing short puts below and below and below the markets on some of our favorite names. So the name of the game, guys, is being patient and letting the market come to you. We're not trying to guess what the SPY and QQQ are doing. We are going to react in a proactive fashion, whether or not once it does happen, when we break either direction, that is going to give us some very juicy opportunities. So this week, still uncertain. The bulls do not look too bad, but they need to get the daily uptrend follow through to confirm that we have our weekly bottoms and that early January may be a little bit better than some people are expecting. Keep in mind, at the end of the week, guys, ends the Santa Claus rally, and that is when you might see a little bit of institutional profit taking. A lot of institutions sitting on some very fat gains in 2024, and if they have not sold for tax purposes so far, they will be selling early January to lock in those gains and defer their taxes from this year into 2026, of course, right? So keep that in mind. The end of the week might be a little bit more volatile than the beginning of the week, of course, after the New Year's holiday and when we come more into the ISM manufacturing. So please just keep that in mind, guys. Cautiously optimistic will be the name of the game for myself in terms of positioning over the course of the week. So that is kind of the weekly context as of right now. Now let's dive into a little bit of the strategy rules, and I'll be flying through these guys today again because I have a 30-minute video on the in-depth rules of the strategy. I'll leave that down below in the description, but as of right now, I will be flying through these just because I do believe that a lot of you are familiar with them so far. So number one, what exactly is writing puts? Well, writing puts, guys, you can just think of it as a buy limit order that pays you. Let's say you want to buy, let's say 100 shares of NVIDIA under the market. There's two ways that you can do that. You can either set a buy limit order down here for 100 shares, but if it does not hit it and the market just runs away, you don't have any shares, you don't have any profits at all, and that's just the way it ends, right? That is where selling puts comes in. It is essentially a buy limit order for 100 shares under the market. So take a look here. I'll pull up the chain for NVIDIA. And if we can see here, if I wanted to buy NVIDIA shares, let's say around the $132 mark, $130 mark, let's say, well, there's two ways I can do it. I can set a buy limit order there, but nothing happens if it doesn't get triggered, of course. Or I can write these weekly short puts, meaning I can sell the 130 put to open and collect about $55 in the process of doing that. It gives me some very good, decent premium that I can put in my pocket if NVIDIA does not go below 130 at the Friday close. Well, then you just get to collect all the $55 and nothing else happens. If NVIDIA does close below 130 on the Friday close, you will have to buy 100 shares as you were willing to do initially anyways, and you will still get to keep that $55. It will reduce your cost basis by 55 cents per share. So hopefully that makes sense. That is the logic behind why we like to sell puts on some of our favorite companies below the market to possibly get into some positions if they do get filled. So number one, we want to build a watch list and filter for red, guys. Rule number one, every single Monday and Tuesday morning, every single morning, as a matter of fact, I always filter this watch list that I've built by red because it'll make sense when we go through the rest of the rules here. I only want to be buying companies that are coming down. It increases our odds of not being assigned and gives us levels that we can get even further and further and further below the current drop levels, right? So when the market is already red, well, it stands to argue that the probabilities of it pushing further and further and further red, especially when you have days like 3, 4, 5% to the downside, usually you don't get too many of those back to back depending on the stocks you're trading. So that's why I always like to filter by red first thing in the morning. Now, rules, solid companies only, guys. You will only ever see me write puts on very solid companies. The last thing you want to do is get trapped in a company that you don't know much about, right? And then you have to look at that company every single day in your portfolio and wonder why you're in the position. So you should only ever be writing short puts on solid companies, high quality companies, high conviction companies for you. Number two, we want to be targeting companies that are in a long-term monthly uptrend or a long-term range of accumulation, right? Long-term uptrend can be something like a Microsoft, as you can see, always usually in a nice long-term monthly uptrend, but now you can see they're in a long-term range of accumulation. So Microsoft always respects one of those two criteria, which is why it's one of my favorite stocks in the market to trade. That being said, guys, this is rule number two because it just improves our odds of not being assigned when you have the long-term bulls at your back. Number three, no earnings this week. You will very rarely see me write any short puts on companies that have earnings. Very volatile event. You guys know it best, right? Even though a stock can post very good numbers on earnings, the share price can move down 5, 10, 15, 20%. So if you don't want to get trapped and end up with any outsized losses, just make the most of it by not writing any puts on companies that have earnings this week. Shouldn't be too much of a problem because there's literally no earnings this week at all. But very good rule to follow as usual. Number four, we want to be writing puts on stocks that are in any support area or an area of breakout retest. These are the only two trades you'll ever see me take when I run the put wheel strategy. So number one, a support area could be this lower area on Autodesk down here. It was 2 years worth of support. Every time it comes down into there, the bulls react well. So that is where I like writing a lot of put options in very large areas of clear support. The breakout retest trade is a little bit different. Here you can see the top end of the range of resistance, and then we get the breakout on the weekly, the retest, and then run. This retest area is usually a very high probability trade. I call it the breakout retest, but all it is a trend continuation pattern. So when we get the retest, usually a high probability trade, which is why every single one of my trades is always going to respect one of these two criteria. Next, we want to be writing at or lower than the expected move. This goes by filtering through red. If you don't know what the expected move on a stock is in a given week, you can come to barchart.com here. Just type it into Google, bar chart, whatever stock you want, NVIDIA expected move. You'll come to this page. The expected move is Wall Street's probabilities of how much a stock can move up or down in a given week. Here you can see the lower expected move on Tesla is 406. So we always want to be writing below the expected move, guys. It improves our chances of not being assigned. If a stock moves down too quickly, down or under the expected move early on in the week, we can be expecting some mean reversion. The price usually is going to try and revert back within the confines of the expected move. So that is once again putting more odds in our favor of not being assigned. So you'll always see me writing at or lower than the expected move in a given week. Now, number 6, we want to be writing on red or flat days. As I said, filter for red stands to argue if we're always looking to write below the expected move, well, you always need to be looking at these stocks when they're trading red. If Tesla opens the week super green, well, we're not going to be able to write below the expected move, are we? It's going to be too far away at that point, which is why you never see me chasing the market. Now, the next one here is our ROI, 0.5 to 0.75% in weekly premium. That is your take-home pay every single week. We want to be targeting 0.5% ROI to 0.75 because if we do this every single week of the year, that guarantees us an ROI per year of about 26 to 30% annualized. That is without any covered calls, without any compounding. This is the baseline ROI. After trading this strategy, guys, successfully for the last 6-7 years, this is the sweet spot, right? A lot of people like to use deltas, 20, 30 deltas. However, the problem is on a stock like Coca-Cola, a 20 delta or 30 delta could literally be less than 1% away for the week. It's just too close, right? Whereas on other stocks like Tesla, you know, a 20, 30 delta can be like 5 to 7% a week. So delta doesn't provide the best thing streamlined across all options chains, which is why I use the 0.5% rule. That encompasses for different IV levels across different options chains, and you can do the math really easily in your head. What does it mean? It just means that when we're looking at a strike price, we want to find 0.5%. If you want to know what 0.5% is there, just divide the strike price by 2, and you need to see that amount on the bid. So if we're looking at the NVIDIA 130 puts for the week right here, the short puts, you would need to see half of 130, which is 65, on the bid. As you can see, it is not quite offering the desired premium right there. And if I were to do the math, you'll see that as well, right? If we just divide the premium right there, 0.58 divided by 130, you'll see that it's just under 0.5%. So this one's not too bad, but you don't want to go too weak in terms of premium. You're just not getting enough ROI for the exposure you're putting up. And you also don't want to go too heavy, too close to the market, because although the premium is very juicy, your risk of being assigned becomes quite large. That's why I like to use the 0.5% to 0.75. It is really the sweet spot between the two. Good ROI, but low chance of being assigned. And now lastly, we want to set a take profit order at 90% of the contract value. This just ensures that we're being capital efficient, guys. If we write these put options early on a Monday or Tuesday morning, and then by Tuesday afternoon or Wednesday morning, the contract is already 90% profitable, why would you hold it until Friday for the extra 10%? You may as well just take your capital back and go shopping for a new play that has more full premium inside of it, right? So just trying to be capital efficient for that. And now lastly, if we get assigned, so if we end up having to buy the shares, well, we're just going to be writing covered calls. So the selling put options, the buy limit order is a way to get into the stock at a discount. And then to get out of that stock, we will use covered calls, which act as a sell limit order while paying you as well. Covered calls, we want to be writing covered calls between 0.5% and 1% in weekly premium. And we always want to be writing at the assigned strike price or one strike higher. The only time you'll see me write one strike higher is, let's say NVIDIA comes down to the 130, and I'm at 130 here and I get assigned because the stock closes at 129. And then the following, and I end up with 100 shares at 130. And then the next Monday, NVIDIA has some crazy news and goes up 5-6% at the open. That is the only time you'll see me writing a little bit higher than my assignment price. But I would say, guys, that like 95, 98% of every single time I get assigned, I'm always writing at the assigned strike prices. So that is everything for the strategy rules. Hopefully that's helpful, guys. Now let's jump into the top 5 options plays, shall we? So top 5 options plays, guys. You'll see that a lot are recurring from last week or the week before. Why? Well, because the levels are still very good. So when the levels are still good, I'll still keep playing the exact same stocks because they're high quality stocks and they're some of my favorite in the market. Stock number 1, guys, is going to be NVIDIA. So NVIDIA obviously needs no introduction. The support level below us right there is about 130 down to 125. This has been great support for the market, prior all-time high resistance. Current support for the market, 26 EMA is right there as well. And I'll remind you, the the price targets for NVIDIA over the course of 2025 are pretty up there. They're in the 160, 170 plus range. So NVIDIA has been pretty much accumulating for the past roughly 3 months of time while improving its fundamentals. So every time we dip down here, 130, 125, I do like to pick up a couple shares, and I've been doing quite well in terms of farming some premium down there. So that being said, the expected move on NVIDIA is 132.64. And if you guys don't like NVIDIA, keep in mind, I have 3 more semiconductor plays right after this one that I'll show you very quickly. So NVIDIA, the expected move, 132.64. Let's see if we can go shopping on NVIDIA below this expected move, preferably into the 130 to 125 support. So we have NVIDIA up here right now, and as we saw, well, the 130, unfortunately, is not providing the 0.5%. It's very, very close. I wouldn't mind doing it, but it's not quite the 0.5% rule. You would need to go up to the 131s, right? Half of 131 is roughly 65, and here you can see there's about 69 cents. So 131 does respect our criteria. It is also below the expected move of 132.64, so I would not mind that. However, the better case scenario is if you can find NVIDIA on a dip on a Monday or Tuesday. They're trying to go for the daily uptrend, higher lows, and possibly reset into a new leg higher. That being said, if we do find an NVIDIA dip on a Monday or Tuesday and the stock dips down to 135, 134, let's say, that's going to free up even better strikes in my desired range of 130 to 125. So you want to be dynamic with your strikes, guys. Depending on the size of NVIDIA's move down on Monday or Tuesday, you want to be going as deep as possible in this options chain while still getting 0.5%. So the strikes I like for this week, depending on how NVIDIA price action plays out on a Monday or Tuesday, if it goes down or not, the strikes that I like the best are 130 down to 125, as low as we can possibly get. And of course, guys, if NVIDIA goes down 5-6% on the Monday and opens and comes really quickly in the 129, 128, well, of course, you go a lot lower, guys. You go down to the 120 strike, right? So the art of this strategy is being dynamic and reacting depending on the size of the move down on Monday or Tuesday. Semiconductor company number 2 is going to be AMD. So AMD, although they do break a couple of our rules here, being in a monthly downtrend, they are coming in to an overall area of support, which is pretty much, let's call it the low 110s, right? 115 down to about 105. The 200 weekly moving average is there as well. And the stock is incredibly cheap. Now, I know that the AMD is a very polarizing company. Some people like it, some people don't. I'll give you my thesis. The company is very cheap right now, trading at a 1.07 peg. Take a look at the analyst price targets. They're all pretty much above 145 to roughly the 180 mark. And here's the thesis. The thesis of the expansion of their data center business. They're going to have some of the best EPS numbers they've ever posted in the company's history over the next 3 years, and the revenue growth is also quite staggering. So that being said, if you do agree with that thesis, Nvidia right now is really trading relatively cheap, so I do not mind trying to farm some premium down there. That being said, the expected move for the week is 121.25, so we want to be going below that expected move, right? Let's have a look on AMD real quick and see what we can find down there. I'll give you 2 semiconductor plays, and then I'll let you guys do the work on the other ones, right? So as we can see, guys, the expected move is 121.25. If we go shopping below that, you'll see that the premium is not too bad, right? At 120, we have 61 cents, but thereafter it drops off. Half of 120 is 60, so you're getting the 0.5% rule there. However, if true to its fashion and AMD has more downside earlier in the week and pulls down into the 123, 122, 121 even, that's going to free up the teens. Think 117, 116, 115. So at a first glance, I like the 120 down to 115 as low as we can possibly get while still getting our 0.5% rule. That is semiconductor play number 2. Number 3 that I love playing is on semi. Ticker is ON, semiconductor, of course. Look at this massive range of support. I love playing this one in the low 60s. So if I can find this one in the low 60s this week, I will definitely be making a play on that. I'll let you guys figure out the expected move on your own now that you know how to. And the other one is Micron. Micron coming down into a very large area of support. I've been playing this one now for the past couple of weeks, and I do like it in the mid to low 80s, as low as we can possibly get. 85 down to $80, I think, is a very cheap valuation for Micron right now. They're currently sitting at 90, which is about a 0.24 peg. That is super cheap for a very high quality company. That being said, I still want to give myself a margin of safety. So 85 to 80 is the area that I like playing Micron. So that is 4 different semiconductor plays. Hopefully you guys can find some inspiration from that. Obviously there's many more because the sector's been out of favor. LRCX is one down here in this range of support, right? There's a few other ones that you can play, like Qualcomm as well in the mid 140s. parties. There's tons of names, so hopefully with the tools that I've given you, you guys can go shopping for your favorite semiconductor companies if you like to run the wheel strategy. Now, company number 2 out of the top 5 options plays is going to be Uber. Now, I've been talking about this one for a few weeks in a row, and lucky for us, it is still relatively around the same price. That being said, the reason I like Uber is because once again, the valuation is extremely cheap at a 1.02 peg. Look at the revenue and EPS growth for the next 3 years. Everything is looking good. The company is now profitable. Obviously, they've been getting hit with headline risk because of Waymo's expansion into Miami. Even though Uber is literally a Waymo partner, you know, the robo-taxi news has hit Uber as a company so far. But as we know as well, it's going to take years and years and years for the scale of robo-taxis to be at a level where it starts disrupting Uber's network effects. That being said, look at the average analyst price target, $75 to $90. Look at the EPS ramp for the company, positive territory, and look at the revenue ramp for the company as well. This is why I love bidding Uber when nobody wants it. We've seen these trades so often this year, guys, where fantastic companies just get hit with negative headlines, stay down for a while, and then pop up. We played Google and hit it with size and made a lot of money. We hit Google, we hit Visa for the same reasons down here, played it with size, and look at Visa now. We did the same thing with Apple when Apple was out of favor at the 170s early this year, and they were hitting it with every single headline in the book. You guys might remember all of these headlines. Right? And now look at Apple now. So when you buy high quality companies with expanding fundamentals, usually it's a good proposition to be buying them when there's sour sentiment, especially from Wall Street around the brand for XYZ reason. That being said, the support range for Uber, 61 down to about 55. I like to get as low as possible in the mid 50s. That being said, the expected move is 59.33, almost daily oversold as well. And it's been coming down hard into a nice weekly downturn right there. Previous all-time high support, this resistance, this is the support area that we're kind of making a bet on. So that being said, let's see if we can find anything below 59.33 on Uber this week. So if you pull up Uber, let's just pull it up real quick. So we'll go shopping below 59. And as we can see right now, well, at 59, we are getting 30 cents. Half of 59 is roughly 30. So that is exactly 0.5%. It does respect our rules. So 59, not too bad. However, if Uber drops Monday or Tuesday, as they did last Friday, down into the 60s, maybe even high 59s, that will free up the strikes that I truly want, which is 58 down to 55, as low as possible in the support range as you can get. If they dip a little bit more, that will be daily oversold conditions, usually a decent buying opportunity for a very solid company such as Uber. So I like the 58 down to the 55 strike. Although the 59 is good, I want to be getting greedy with these stocks, right? Because we know that any further weakness in the SPY and the QQQ can pull these companies down a little bit more. That's why I'm giving myself a little bit more margin of safety. So for me, it's 58 down to 55. That is for company number 1 in, well, part 3 of the top 5 options plays. This is company number 1. Another network effect stock is Airbnb. Airbnb, I love this one as well for the same reason as Uber. It is the sheer size of their network, right? Their network of Airbnb individual owner operators, as you will. So Airbnb has been hovering in this range, call it roughly 140 down to about 130 for how long now? For a very long time, since the month of October. That being said, the true area that I like it the best, guys, is pretty much 125 down about 120, a little bit lower than right now. Expected move for the week is 130. If Airbnb drops significantly early on in the week and frees up 127, 125 strikes, I will be looking to build a little bit of position there on Airbnb. Still one of my favorite companies, has just been relatively weak compared to some of its sector peers. Look at Booking Holdings, flying. Look at Expedia, absolutely flying as well. Look at some of the top hotel chains, Hilton, flying. Look at Marriott as well, flying. So Airbnb is playing a little bit of lag right now towards the rest of its sector peers. And if it continues lagging, even though the travel sector is doing really, really well, I would love to pick up some shares down here, 127 to 155, or 125 rather. So those are companies number 3 for top 5 options plays. As you see, guys, I say top 5, but I'm including different ones per segment, right? Now, options play number 4 for the week is going to be a combination of fintech plays. The first of which is going to be Square. So Square, love this company, guys. If you don't know what they do, obviously they have these Square merchant devices, but they also have a 3-in-1 solution in terms of fintech. They're kind of like PayPal. They offer the Cash App platform. They're kind of like Affirm. They offer buy now, pay later services, and they're kind of like SoFi as well because they provide banking, trading, and and loan solutions for customers. So they do a lot of everything, and the valuation right now at 90 bucks is extremely cheap at a 0.73 peg. You guys get a common theme here. I'm looking for cheap companies with great growth prospects. Company is now profitable, EPS revenue is expanding well. Look at these metrics for the next 3 years. Very, very good, guys. Now, this company is doing something different. It's a breakout retest. Look at this weekly breakout retest. Where are we retesting? The high end of the range of resistance of the last 2 years. We also have all the heavy moving averages below us as well. So this range right here, 87 down to roughly 80, let's call it, this 10-point range, is a very attractive area that I will continuously be looking to farm some premium in. That being said, the expected move for the week is 85.96. Let us go see if we can find any positions on Square for below that. Now, keep in mind, I do have this one myself personally, which I fired off on the Friday session. I went with the 83 puts, and you can see I got 0.5%. I got 44 cents. They're already doing well. We're already up about 25-30% on that trade. That being said, 85.96 is the expected move for this upcoming week. So let's go shopping together and see, can we still find some decent ones, such as the one that I just fired off, or maybe do we have to wait? The expected move, 85.96. As we can see, below that, 85 is giving roughly 0.5%. Half of 85, let's just call it about 42, 43. So you can see they are paying above the 0.5% rule. Even at 84, guys, you're still getting 43 cents. Now, at my strike, the premium is no longer there, but 84 is not too bad. That being said, if Square has another day of red on a Monday or Tuesday, guys, and brings us down into the expected move, think 86, 85s, then you will get an even better strike than me, possibly, maybe even 82 to 81. So at a first glance, the ones that I like best are 84 all the way down to 80, as low as you can possibly get in this range of support while still getting 0.5%. That is fintech play number one. Fintech play number two is a company that a lot of people now have known to love, but nobody was talking about it back here when we were playing it heavily on the channel, but now everybody wants to play SoFi. So I'll give you my ideas on how to play SoFi with the wheel strategy. Now, this does break a few rules, guys. Number one, it is a monthly uptrend, but we're not really retesting anything. They're trying to hold on to this last level that we've kind of breached over and above. They're trying to hold on to it, but you know, it's a little bit iffy whether or not this is actually true support, or if they have to find maybe a more of a baseline of support down here, maybe in the 14, 13s. So SoFi, I do not mind playing it, but I'm not going to be chasing it very close. And if I do chase it relatively close, I'm definitely not going to be playing it with a lot of size. That being said, the expected move for SoFi this week, if you like these types of momentum plays, the expected move is 15.15. So let's go shopping on SoFi and see, can we find any juicy premium on SoFi below the expected move of 15.15? So let's go shopping on SoFi, and right here you will see that for the Friday, they do have about 13 cents. That is closer to 1%, not too bad at all. But look down here, guys, the 14.5 strike is trading at roughly 0.5%. Now, you may not think that's a lot of capital, but still, it's all relative, right? 0.5% is 0.5%. Whether you're spending 10 grand, 20 grand, or 5 grand, 0.5% on the capital is still 0.5%, right? So that being said, I don't mind the 14.5s. However, if we drop a little bit more on SoFi, guys, coming back down into the lower 15s, well, that's going to free up a lot more premium on the 14.5s. So this one, the way I'm playing it is if it comes down a little bit more here, guys, into the low 15s early on in the week, and we start retesting the lower range of this support, I will be looking for the 14.5s. And if for some much reason it gets really bad this week, maybe we can even get the 14s, but I will not be going too heavy because that will be weekly consolidation, and I'm going to be wanting to build a position. Some at 14.5 and 14, some at 13 if we come down there as well. I'm going to be looking at DCA as we fall into here because I expect SoFi to do very well, but we could just have some monthly consolidation before another leg of rally. So I want to be bidding these dips, but I'm not going to be going too heavy or too close to the market and then have no more money to DCA down here. So that's the way that I'm playing SoFi, a little bit conservative, right? So that's just the way that I do it. So those are the two fintech plays. Now for play number 5, guys, these are going to be some of the riskier plays because they are 2 times leverage plays. So feel free just to take an idea from these, but none of this is financial advice anyways. These are just some of the plays that I'm looking at myself. Number 1 is going to be BITX. BITX is the 2 times leverage version of Bitcoin in terms of an ETF. That being said, I like this one because it has a lot of volatility and we do not have to play it too aggressively. I'll show you the way that I play it myself. You'll see that for this week, I like to go severely under the market for these. I have the 45 puts and we got about 57 cents for those, well over 1%. But even that is a little bit aggressive in my humble opinion. Now, the expected move for BITX is about 48.45, and if that were to come all the way down there, guys, below that, that would be Bitcoin roughly 88,000, right? So I went way below at the $45 strike, but I'll show you the premiums, and I'll show you, you do not even have to go as aggressive as me. Well, you don't have to do anything because none of this is financial advice, but for myself, let's say, I wouldn't have to go as aggressive as this. I can even go even lower than this and still get very decent premium. Take a look down here, guys. The $40 strike is trading for about 25 cents. The midpoint of the bid and the ask is about 25 cents. That is 0.5%. The 39s, you can get 20 on the bid. That is once again 0.5%. Even the 38s or the 37s, if we put in an order for 20 cents at the midpoint here, it may just get filled. And that would be a significant decline for BITX in a given week. At 40, let's say, that would be 25% down. That would mean that Bitcoin itself would need to come down a whole 12, 13%, which would put us pretty much all the way down there at 80K. I would be a buyer, but it's not a recommendation for you. This is just for people who enjoy playing Bitcoin. I'm giving some insights and some ideas as to how we can play it in a non-aggressive fashion with a very large margin of safety and still get handsomely rewarded for it. So I went a little bit more risky with it with the 45s, but in all reality, it's not that risky in my opinion because we have a large margin of safety. And if ever we get assigned, the covered calls on these are extremely, extremely juicy. Look at the covered calls at the money strikes, right? We're talking about almost $3, which is crazy amounts of premium if we do get assigned. So that is how I'm looking to play that one myself. That is BITX. And the second one is going to be a leveraged version of Tesla. Now, I would give Tesla, and I do think Tesla can be a decent opportunity if we follow through with the daily downtrend coming into this area of support, which is the previous all-time highs, right? 410 down to about 385. Could be acting as a first line of defense for the bulls, pulling into it hard. Could find some support down here, right? Now, I'm playing this one a little bit differently because writing a short put on Tesla here at 380, that'll cost you $38,000 in capital exposure. Not everybody has that amount of money, which is where the leveraged ETFs come in. This is Tesla 2 times leverage ETF, but 2 times leverage means we have to be twice as careful. So keeping that in mind, the expected move is 27.97. This area is literally the 28,797, that is literally this area on Tesla right here. However, I want to be going lower than that, guys, as low as we can possibly get because we know it's 2 times leverage. We know Tesla can move very, very quickly. So for that reason, I played this one. Look how far I went down, guys. 23.2 is the contract that I have put in place on the Friday session. 23.2, and we got 17 cents. So better than 0.5%, about 0.75%. But you can see how conservative I went on this one, guys. This is literally, my strike is literally 26% away. It would mean that Tesla has to drop 13% by the Friday close to assign me. 13% on Tesla would put us right down where I actually want to buy the stock on a big flush, which would be 360 down to about 350. So keep that in mind for Tesla. The expected move, as I said, on TSLL for the week is 27.97. You can see I got all the way down there. You can even get lower, guys, and still get a decent amount of premium. So I'm playing this one, but I'm playing this one fairly conservatively because keep in mind, Tesla reports their delivery numbers this week. And if they are lackluster, we could have some big declines on Tesla, but I will be looking to play this dip. But look how many, I have a very large account, guys. I run about $100,000 in this account. Look how many contracts I did. Did I do 5 contracts, 10 contracts? No, I did 1 solo contract because if Tesla comes down a little bit more this week, I'll be looking to average into this play by possibly either going at the same strike. If we come down, I'll get more and more premium at this strike if we come into it, or I might be even able to throw in some DCA orders lower and lower and lower and lower my overall exposure and cost basis on this Tesla trade. So those are 2 different leveraged bets on BITX and Tesla in a way that is quite conservative in my humble opinion, right? a lot of people get seduced by the premium by playing these super close. And it makes sense, right? You see a lot of premium down there and you just want to play them very close to the money. But keep in mind, right, the reward is not free. It comes with the additional risk. So a lot of people love playing these super close to the money, but the risk of being assigned, guys, becomes larger and larger, right? You may love getting about $126 for the 29 sevens, but the risk of being assigned there is quite high. So the moral of the story is, we don't want to get too greedy on these because we know they can move fast. I would rather pick them when we're at, discounted lows, when Tesla is selling off in a big fashion. If it does happen, that's when I'm looking to buy the fear, buy the pain, and get a little bit of mean reversion, get out of the trade with some handsome profits. So those are the top 5 options played for the week. As you saw, I included multiple ideas in every single tranche of those top 5 options ideas. So hopefully you guys enjoyed those. Now let's move on to some of the bonus plays, shall we? So the bonus plays, I'll be going over them quickly because, although they are good plays, number one, they're either somewhat risky, as I just showed with the BITX and Teslas, or they're either not quite ready just yet, right? They're not quite at our levels, but I do like to keep them on the back burner on the watch list. So a lot of these trades, the bonus trades, guys, they're not quite ready just yet. Google is going to be number one. A lot of Mag 7 companies, guys, if Google comes back down, look, I'll look at these on the weekly, right? Beautiful weekly uptrend. If Google comes down into the mid 180s, I'm looking to write some short puts in the mid 180s, get the weekly higher lows, and go for the weekly trend continuations. That's on Google. Another one we're looking to do that on is Microsoft. I know Microsoft is a very expensive stock, but that being said, the weekly trend is very nice. Coming back down into support, if I see Microsoft and I can find some premium down here below 420, think 415 to 410, sweet spot for Microsoft, I will be bidding. Amazon as well. If Amazon gives up a little bit of a rally here, comes back to test this previous breakout range, which is 215 down to 200, I will be looking to possibly write some short puts on Amazon. They should be having a very fantastic year ahead of them. Those are just a few of the ideas. I mean, we already went over Tesla as well. Those are just a few of the ideas that I have on the back burner, not quite ready yet, but you guys know how much I love playing big tech. So we ought to be a little bit more patient. And if they come into our levels, guys, I will be looking to play them. Another idea is possibly some solar plays, right? We know Enphase has been crushed because of the rising interest rates as of recently. But if I see some good opportunities on Enphase, lower 60s, let's say we know Enphase moves a lot. If I see Enphase 5-6% day drop, and I can find some premium down here, 60 all the way down to 55, I'll be looking to go for those. Same thing with a company like FSLR. FSLR, fantastic company, but the sector's just been out of favor. The next area of support down here is roughly 166 down to 140. If I see FSLR down 5-6% on a day, and I can find some decent premium for strikes all the way down there, I'll probably be going for some FSLR. Now, the next one, a semiconductor play that you guys know very well, SMCI. I like SMCI because of the volatility. I'm playing it in the same way I play BITX or TSLL. I'm playing it well below the market. You can see that I do have an SMCI for this week upcoming, which is the 27.5 puts. I gave myself a very wide margin of safety. You can see that before I get a sign, stock needs to go down 13-14%. So I'm not playing it too close. I'm playing it in the area of support, 28 down to about 22, as low as I can possibly find. Decent valuation for SMCI down there. But once again, this play is risky. You either like this stock for a reversion play to the upside, or you absolutely hate it. The other one that people feel the same about is XOXL, another 3 times leverage play. The way I play this one, exactly the same. You'll see that I clipped this one on the low of the day when the SOXL was down 6-7% on the Friday session. Look what I fired off. I fired off this contract right here, the 24 puts for 14 cents, over 0.5%. And look, the trade is almost 100% profitable already. I went all the way down there at the 24s, but at a first glance, I like these levels. 27 down to 23, as low as possible, guys. It's the big area of support for SOXL, the 3 times leverage version of the SOX, which is pretty much your semiconductor ETF as a whole. So I like to play these, but when I do, I play them very conservative and I give myself a very wide margin of safety. Another one, same concept, is MSTR. A lot of people like playing MSTR, but the problem is Bitcoin's been sideways and relatively weak. So MSTR has just been bleeding and bleeding and bleeding. The way that I like to play this one, same as SMCI, same as SOXL, same as BITX. I like to play this one way, way, way under the market, guys. You can get some very juicy premium on MSTR. However, if you play it too close, you might get burned, you might get assigned, and you might get a little bit nervous because it is a bit of a heavy trade. That being said, look how far I can go down on this options chain and still get 0.5%, right? So keeping in mind, look where the 0.5% rule comes in, right? It literally comes in at about, let's call it 255. 255 are getting $1.10. 257.50 you're getting about $1.20. That's very close. 260 is where it's at. 125, 130. Look how low that is, right? 260, guys. I mean, MSTR can move very fast, but that is a 21% margin of safety on MSTR. So that is how I'm playing those, guys. I'm playing it very conservative, waiting for a big red day on MSTR, and then riding way, 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 way below the market in this little pocket down there. That's just an idea for them. BABA is another trade. If you guys want to make a play on these China recovery stocks, well, 80 all the way down to roughly 76 is the zone that I want. You can see we're trading roughly above that right now. We need a last little leg push down in there. That'll free up the 80 down to about 75 strikes. That is the area that I love playing BABA in. Record profits this most recent quarter as well. Then there's some value plays that have been ready for a while, right? It's just they don't have very good volatility. You need to play them very, very close to the money because, as we can see, right, if I pull up the chain for Coca-Cola, you'll see what I mean. You don't really get much margin of safety because the implied volatility is so low, right? The stock doesn't fluctuate that much on a daily basis. Look how close we have to get. 62.45 is the price. Look, even at the 62s, guys, there's not even 0.5% there, right? So it stands to argue you need to wait for a big red day on Coca-Cola. 1.5% to the downside could free up some very juicy opportunities. $60, the lower end of this zone. What are we trying to do? A monthly breakout, retest, and run. This has been a nice area of prior resistance. Should be acting as support for the bulls. So 61 down to $60. If I see those strikes with some good premium, I will be going for them. Same concept for UPS. Same thing. Doesn't have that much volatility, so you need to catch it on a day when it's down 2, 3, 4%, something like that. That being said, the lower range down here, lower 120s, 123, 120, higher end of the resistance range from 2017, 2018, current support, and the 200 monthly moving average is there as well. Stock is doing well. They're rounding the corner of cyclicality for the business as well. The valuation is good. The free cash flow yield is very good. The dividend yield at about 5.17% is very good as well. So I like to be bidding these companies down here, but I have to be getting a big red day to do it because there's not much premium on the contracts until they bring in some of the volatility, right? So that's just a few of those. Moving on further, some of the cybersecurity plays are ready. Some others are not. Zscaler could be providing a decent opportunity if we continue sliding into the support range. 175 down to 150 as cheap as possible, guys. It's been a huge area of congestion for Zscaler for a long time. I want to be getting as close as possible to the 165 200 weekly moving average. Not a bad proposition, guys. A few of the cybersecurity plays are ready, but some are just not close to any levels, right? Datadog, too far away. Palo Alto Networks as well. This one is a little bit too extended from any big areas of support. Some of them are getting into some zones, like you can see Cloudflare here trying to pull back into a retest area, but a lot of them are just not quite ready. The one that looks the best for the put wheel, in my opinion, is Zscaler. But then again, don't feel forced to play these companies. You guys know which cybersecurity companies you like the best, so stick to the ones you like the best, because at the end of the day, if you get a sign, you're the one that's going to have to hold the shares, right? But some of them are not looking too bad. And then we have some of the longer term recovery style plays, right? If we want to be making some bets on Nike to possibly recover in the future, they had earnings. Their earnings weren't bad. At least they acknowledged that they had an execution problem, that they're looking to turn around the company. We've seen these turnaround stories play out so far. A couple of them have done quite well since they've acknowledged that they had a problem and they're looking to fix it. Starbucks has done well after they've acknowledged the problem and put forth steps to fix it. Disney has also done quite well since they've acknowledged the problem and put forth steps to fix it. But a few ones that have now just acknowledged they have a problem but are somewhat unclear on the steps to fix it are Nike coming down in this very nice area, 75 down to 68. So Nike, if ever I see like a 2, 3, 4% day sell-off on Nike, I might be tempted to play some short puts down here, 73, 72. Not the worst trade idea if you're looking to play these recovery stories. Another one like that is Intel. Now, I know a lot of people don't like this company, but still, I mean, we are trading very, very low right now. It is a relatively cheap company. And look at this massive support all the way back from, let's call it what? 2002 all the way through 2012. So it is a very big level, this whole 20 down to about $16. So if ever I find Intel on a big down day and they give some good premium down here, I wouldn't mind playing one contract or two and just maybe holding it for some sort of recovery story. So not the worst, right? So there's a lot of different plays, but a lot of them are also not quite ready, guys. So those are all the top 5 options plays and all of the other plays as well. I mean, Palantir is a little bit too extended. If we come back down here, in the low 70s. I may be tempted to play some in the mid 60s, but right now I just don't feel any need to chase Palantir. And if I can go through all this list, right? Cart's a decent level, but needs to come down a little bit more, right? Robinhood, very decent stock or whatnot, but they're very extended, right? You don't want to get trapped here, and then it goes into weekly consolidation, right? There's not really any levels to be trading off of right now. You know what I mean? The levels were all the way back here. So a lot of them, you know, some of the ones that I like playing often, they're just not quite close. Chewy as well. 34, but I want to play it down here, 31 down to like 28. So it's just a little bit too extended, you know what I mean? And then there's some sectors that are just out of favor. I'm not playing oil right now because the whole sector is out of favor. So even though we are in support zones for a lot of the biggest oil companies, I just don't like playing the sector. I just don't like playing commodity companies usually as a whole. And even some of the healthcare names too. I mean, they're down into support, but I just don't like playing them because the sector is out of favor and we don't have Trump's formal policies on what he plans to do with the healthcare insurance business, what RFK Jr. plans to do with the pharmaceutical business and stuff like that. You know what I mean? So there's a bunch of other stocks that are red, like NVO, you know what I mean? But I don't really feel the need to play NVO right now. So I'm sticking with some of my favorite companies, the ones that are ready, and gave you guys a ton of different trading opportunities and ideas. So hopefully you guys can get inspired from some of those. That's pretty much everything I had for today, guys. If you enjoyed that, consider dropping a like on the video. Sorry if I'm talking too fast, trying to cram in as much info as possible. But if you enjoyed the video, consider dropping a like. We'd really appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. We do these videos every single Sunday in preparation of the week to come. So hopefully you guys subscribe and I see you back in the future. And lastly, if you have any questions on the strategy or you want my opinion on a possible wheel play that you may be considering, not financial advice, of course, leave it down below in the comments and I'll be glad to help you guys out to the best of my abilities. And lastly, guys, if you want all of my trades in real time, the live trade alerts for all of the wheel trades, but not only the wheel trades, we don't only do that. I know this video is all about selling options, but I mean, we do a ton of call options, right? If you followed my account so far, tons of call options, call debit spreads, put credit spreads, you know, leap call contracts, long-term share buys and share swing trades. We have everything. So if you want all of these trades, these are all the trades since the inception of the Discord. The green check marks are all the wins. If you want all these trades in real time, the link down below to the Discord is in the video description. Of course, we have all the live trades as well. I do private morning live streams Monday through Friday every single day for about an hour or two, where we do find these live trade opportunities and I answer all you guys' questions. Private videos where I go over more trading strategies in detail for call options, for this wheel strategy more in detail as well, stuff that I don't put on my YouTube. And moreover, you can ask me all of your questions about stocks and options in real time, and I usually answer very, very quickly. So if those are all things that may interest you, you can find more information down below in the description. We have a coupon code for the holiday period. The coupon code for a 30% discount off of your first month is Santa in all caps. That coupon code expires tonight, this Sunday night, 11:59 p.m. Eastern. And unfortunately, there will not be any more promotional codes for a very long time in the future, guys. I did a couple of them for Black Friday and for Christmas, but now at least probably for the next couple of months, there just will not be any promo codes. So if you wanted to try out the Discord, if it's something that interests you for 1 month, well, you get 30% off. And once again, the coupon code is Santa in all caps. The link to that is in the description. So thanks very much for watching, guys. Pleasure as always. Have a great week in the markets, and I'll see you tomorrow after the close for our daily market recap. That's it for me. Take care and peace.